Okay guys, I've talked about this setup a few times in some of my market update videos, talked about it a little bit in the interview this week with Horse, but I wanted to do a video where I really kind of specify this out, this setup. And I know what I say in the title is a little bit hyperbolic, that this is the best setup in any market on any time frame, and I really believe that. I'm going to tell you why that is. I'm going to show you the reasoning for that. I'm not just saying that. It very much is true in my opinion. You can form your own opinions. You're not going to believe me unless you actually do your own research. You have to do your own research in markets to be able to get the confidence to be able to actually make trades, because if you just watch this, you still won't have the confidence, I believe, without actually doing the same research that I did. So one thing I wanted to do, and I've said this many times, I wanted to figure out what is the major characteristics of tops, of major tops and major bottoms. How is everything positioned? How is everything aligned when we have those setups? And the thing is, tops way harder than bottoms. Bottoms are so much easier. That's the whole reason I wrote the book Sell Signals, was to try to get better at identifying tops early, because it's so much harder. So I had to put a lot more effort into researching that than I had to do to research this particular setup, because this is just, it's way easier. Basically, what are the characteristics? You need to be at least 15% off the highs. So there was obviously a situation where we're 35% off the highs. Let me turn this off just real quick so you can see it better. But here we were 21% off the highs in 2018. 2015-16, we were just barely 15% off the highs, so that one also counts. So that's number one. That's what you have to see. You have to see that some capitulation in the price action, some capitulation selling. So certainly 2020 counts. To me, 2018 certainly counts. 2015-16. Yeah, I mean, this is some pretty strong, rapid selling, especially the first time it dumped. And extremely volatile sideways periods are also very good at resetting sentiment, which is a big part of what this is. This is just a reset of sentiment after usually a pretty long bullish period. And then you reset sentiment with a little bit of a deeper correction. Small little cyclical bear market, if you want to call it that. That's kind of what I call it. People disagree, but whatever. You can have your own definition of bull and bear market. It doesn't matter. I don't follow the standard definitions necessarily. What else? So like I said, sentiment and positioning, washouts across many metrics. So I'm not going to show you like all of these things because it would take too long, but look at like what B of A bull bear was saying here. B of A bull bear was at 0, which means like 0. I believe it's 0. Yeah, when it's like the best buy it's ever been. Basically, it was maxed to the lows, which means it's an extremely bullish setup in terms of sentiment and positioning. CNN fear and greed, extremely low for most of this. AAII was washed out. All the surveys were washed out. Hedge fund exposure was washed out. Everything was washed out. Big time. And 2018 was pretty similar, maybe not as extreme. 2015-16, we got pretty washed out here as well because of how chaotic this price action was. Breadth is terrible, and then breadth turns around very quickly, so you get a breadth thrust. Now, the other day in the interview, I couldn't remember exactly how I had kind of calculated this, but in the book, but this is one way you can do it. This is just the 10-day moving average of the advancing issues divided by advancing plus decline. So it's the percentage of stocks that are up on the day, and it's the 10-day moving average of that. So you can see breadth in 2020 and during that crash was some of the lowest we'd seen in years, and it quickly turned around. Now when we get here, right here, it's still, it's still improving, but it's got a long ways to go to get to there. But so technically the thrust part probably wasn't until a bit later, which that's also kind of common, but you'll at least see some signs of a breath thrust in process or close to triggering with this setup. DIX, if you look at like the 5 and 10 day moving averages or a longer term moving average of DIX, you'll see very high DIX. 2015-16, we had some of the highest DIX clusters we've ever seen. Basically, clusters of DIX is what you're looking at. I know some people are going to make a joke, but me too, probably. Yeah, even in 2011, during that deeper pullback, big clusters of DIX prints. that's another thing you'll see. Another thing you'll see is if you combine all the dealer positioning off every futures account that is related to indexes, like we did here, you'll see extremely high levels of dealer long exposure. When they get above the zero line, they're actually net long, which is crazy rare. So that in and of itself, just being above the zero line is just an outlier event. And every single time, for the most part, yes, I know they got above zero here and then we had a double dip, but definitely, I mean, still, if you had bought down in this dip because of this and held through that, you did extremely well. So, I mean, execution on trades is still good. I mean, you can still, just because it's a good setup, if you don't execute properly, if you don't trail your stops and have risk management, you'll still probably lose on this somehow, even though this is kind of a hard setup to lose on. And then you'll get a price action kind of setup. So we don't want to buy the falling knife, right? We're not just going to buy it as it's coming down. Although, I'll be honest, I was buying some low leveraged exposure throughout this because I was seeing so much washout in positioning and sentiment that I thought a turn was coming. I didn't know when. Obviously, you don't know when, but just bought SPY, I bought QQQ, 1x leverage, I bought FANG. And then once we finally got the turn and actually got the setup, that's when I started getting some leverage on with the futures. And over here, once we finally got the thrust, the proper thrust, I added even more. And then I pretty much was at my full size and traded around that for years. There was a few times I did go to like a full cash position throughout this, anticipating bigger pullbacks. Sometimes I was right, sometimes I was wrong. Didn't always get everything right for sure, but just traded around that position, and I'm done. I'm done with this setup. I'm considering this trade closed now. I think we have shifted regimes, but I'm getting on to a different topic now when I start talking about that. But I think we're officially into a new type of regime. Exactly what, I don't know. I think it's either a 15-16 or a 2018 type of regime. That's my most likely scenario, but I think, like I said in the last video, don't discount that we're potentially just going to completely wash everything out extremely fast here, which that would be awesome if that happened. I don't know if that'll happen or not, but I have a feeling it won't be that easy, but we'll see. What else did I want to talk about? Yeah, you can get long and hold it for a long time, trade around that position. You can use the setups from my book Sell Signals to kind of reduce exposure near the highs, and it won't work every time, but sometimes you'll be able to just add a little bit of extra alpha by trading around this. And with intraday day trading, you can add even more alpha if you actually want to do day trading. Day trading's hard, but I do it for part of the day on some days. When the market's just slowly grinding higher, day trading can be very unproductive. But when the market's volatile, day trading opportunities do kind of pick up, and that's where I'll be a bit more active typically with my day trading. Permabears always respond to me by saying, before I get into that, before I talk about Permabears, because we always got to talk about those guys, but this is another way you can measure breadth thrust. There's the Whaley breadth thrust, there's the Zweig breadth thrust, there's a bunch of different ones, but this is one in the 2018 pullback that triggered, and it's the 10-day EMA of the NYSE up volume ratio. So first you got to get below 40%, and then it gets above this 61.5%, and that's the trigger. That's the actual thrust. And you can see it was a little bit after that breakout from the high tight flag. That was the confirmation. And that's typically what you'll see is a bit after the setup actually appears, you'll get further confirmation by some actual quantified breadth thrust signals. Now, Permabears tell me the reason this setup works and why it won't work in the future is because we haven't had a secular bear market in forever. But first of all, I don't understand why people are so obsessed with constantly thinking this market that's basically been in a bull market its entire life with some secular bear markets mixed in. There was a little one here. Of course, obviously back here was a secular bear market. But the runs in between, the bull runs can go on for a long time. It's 240 bars from the Great Depression to this one. And then you had 305 bars. These are monthly bars during this bull run. This right here is probably the longest bull run. So people saying that this is the longest bull run in history and we're due. First of all, you're not due or never due for anything in the market. That's a really bad way to think about markets. Nothing is ever due. Second of all, I mean, we could have a lot more to go. I mean, if this secular bull goes on as long as this one. Now, I don't think that's going to be the case because this was a period of incredible economic expansion for our country, and I don't think we'll probably repeat that. But just saying that is due is just it's not a good way to think about the market. And the other thing is, okay, so let's say we get this set up in a secular bear. Let's say this setup happened. Remember, this is the monthly charts. Say we get this set up somewhere in here. Could you not, with proper risk management, make some money there? You could make some money there and trail your stop. And once this thing gets far enough in profit, at least put your stop at break even or higher, at least. But if not, we start to chop around sideways here. That's probably a time to start tightening your stop really close to price. Then you can lock in some profit. There's no guarantee. I just don't understand. There's always, like, if you show a really good bull setup, then bears just want to say it only works because of the bull market. But this is quite possibly the best bull setup you could get, and it only happens after a pretty sharp sell-off. So there's a lot of bears out there that there is no setup that they would ever see that they would get long for. So I don't know why, but that's it. Basically, this is the strongest market the world's ever seen, other than, you could argue, Bitcoin, but Bitcoin only has like 10-15 years of history. I'm not yet ready to call it the strongest market in history. Let's see the next 10 years, which I suspect will not be nearly as good as the first 10 years, and I highly doubt it's going to be the replacement for S&P 500 for people to get some alpha long term. But we'll see on that. I think I covered all that. Yeah, so the setup, you get long and you can trade around it. I don't use a set target. I don't have a set time period to hold. It can be held for a year or two minimum, sometimes more. Yes, during bull trends, lesser forms of this setup appear. I don't know if I addressed this yet, but during these pullbacks, basically, because there's no one-size-fits-all setup. There's no setup that, like, well, this setup would appear here, and it'll appear here, and appear here, and appear here. And not that exact setup. But in smaller pullbacks, especially early in an uptrend, you don't need like massive capitulation. You don't need breath washout. You don't need all that to get long. And it's another, people think that every time we pull back, that I see it every time on Twitter. Every time we pull back, people will say over and over again, I don't think there's been enough panic yet. You'll see that constantly. You see that right at the lows. There's not been enough panic yet from all these like high follower account Twitter accounts. And usually that's pretty close to a low when people start saying that. So basically this setup in lesser forms does appear throughout even these smaller pullbacks. You'll see basically lesser forms of this setup. And it's just the nuance of knowing how to calibrate it for where we're at in the cycle, basically. There's no setup without a price action setup, so we're not buying as it's just flushing down. We're waiting for some kind of reversal and some kind of, for me, with any setup, I prefer, even on day trading, I prefer like to work against some sideways consolidation, some kind of basing pattern. I don't like when it's just flushing one way or another and trending. Just trade with the trend until you get some kind of consolidation to work against. During corrections, and this is an area I'm going to try to improve on this year, is during corrections, you can trade against like high OI strikes, like spot gamma levels, tier 1 alpha levels, high volatility levels. Those actually, especially in negative gamma environments, you'll see a lot of reactions at high open interest strikes. In negative gamma, the other thing you see is a lot of taking of liquidity because there's not enough liquidity to go around. So what will happen is the algos and larger players will seek liquidity wherever they can get it. And like even intraday, on Friday, I did get long here after all these stops under this support were taken out. You don't just get long, you gotta wait for a bar to kind of come back up, you know what I mean? You need a reversal bar. You could call it a hammer or whatever people want to call it, even though this technically isn't a hammer here, but you know what I mean. You need some sort of reversal, but you could even just draw a stupid trend line, which I hate trend lines, but you could draw a trend line here and like, hey, you know, after we take out the stops down below this level, you got stops under here, stops were taken out, we retake that level and we broke this trend line to the upside, and now you can get long. And look what we did again after that. we took the liquidity up here and we reversed. So I took this setup on Friday, but it was OPEX. I felt good about getting a winning trade, and I did not take the short setup, even though I did kind of like it as a short setup. And I even mentioned it in the Discord that I kind of liked it as a short, but I didn't take it, although that would have been a pretty nice trade. I wouldn't have probably held it for the whole thing. I probably would have sold against that support. Or I mean, taken or covered my short against that support. But you know what I mean. Yeah, I think I've covered everything. I can get into more setups and things like that if you guys want. If you guys like this, the way of if you like looking at the market like this. If you want me to do this more, just let me know, and we can do that. See you guys.